Thanks for tuning in to our weekly investment audio cast that we call Cutting Through the Noise. I'm Tony Welch, Chief Investment Officer at Signature FD. So we'll spend the next 5 minutes or so with a recap of market action last week, and then we'll dive into the economic developments that occurred also on the week. We'll also preview what we're watching here for the week ahead. So, starting with markets, last week we did see a bit of a pullback in stocks broadly. Large cap US stocks shed about negative 0.6%, but they do remain up almost 29% for the year. Now, small cap stocks were underperformers for the week, and most stock market sectors were negative. The only two sectors that posted a gain last week were consumer discretionary and communication. Now, thus far, the technical deterioration that we saw last week, that's just a minor divergence, but it is something to be cognizant of nonetheless. Now, inflation data last week came in line with what economists had expected, but nevertheless, inflation has firmed over the past quarter or so. Headline consumer inflation came in at 2.7%. For this year, inflation has seemingly stabilized in that mid to high 2% range. Now, that's above the Fed's target, but it still remains likely that they're going to continue with their easing cycle with their meeting this week. Now, a reacceleration of inflation into next year, that's a potential risk for the markets, especially if it means that central banks would need to begin tightening their policy rates again. Now, among other impactful data from last week, we saw a strong pop in the NFIB Small Business Optimism Index, but a pickup in initial unemployment claims. So those kind of offset each other. So, our read of the data right now is that tight monetary policy has somewhat slowed economic activity. But there's a very positive wealth effect today that's driving consumption higher, which in turn is making it difficult to get sub 2% readings on inflation. Now, in the week ahead, we'll have the Fed meeting where the market is largely pricing in a 25 basis point cut to the Fed policy rate. We'll be watching their forward guidance to inform our view on rates in the year ahead. Additionally, we're going to get retail sales data, housing market updates, and the personal income and outlays report on Friday. That report will include the Fed's preferred PCE inflation metric. So join us next week to hear our take on the Fed's policy statement and the other impactful news from the week ahead. And as always, thank you for joining and have a great week ahead.